Hari, are you going to explain what logic?
Yeah, everything. So today I'm going to take discretionary trading majorly. So everything that I'm actually taking, all the trades that I'm actually just taking, I will actually be explaining. We'll just start in another 2 minutes, okay? Hello. Today's today, like I'll tell you, like how our agenda of today's meeting is going to be, or this live trading session is going to be. So I'll make it as interactive as possible. So in today's live trade, something special is that this trade that I'm doing live, I'm also streaming it to almost. I'll stream this live trade to almost 1,000 plus people. That is, when you guys are here, there would be almost like around 1,000 plus people who would. I would share the links to almost 1,000, 5,000, 6,000 people. Let's see how many people will join. I think we could actually have around 200 to 300 people joining in for the stream easily. Okay.
Good morning, sir.
Very good morning. Very good morning. And I will be taking discretionary trades today. That is, we'll look at price action, we'll analyze the charts, and then we'll take the trades. And along with that, my focus is going to be majorly on risk management. So my risk tolerance for the day would be 2%. So right now I'm running at around right now I'm kind of actually running at about 1.5% profits. So max to max, I will lose the profits that I made from my overnight position. So that is how I usually build up, and I'll start by showing you like how we have been performing in September so far. I think Umid sir came last week, and that time we were up 16%, right? So now we are at around 18.5%. We booked another 2 in the last 1 week. 1.5 weeks. It was 1.5. Yeah.
Hari, are you like when you said you are already on positional trades?
Yeah.
What trades?
I'll share everything. I'll share everything that I have right now, all logics, everything I'll share. Okay. So what was the view? Everything I'm going to share. No worries.
Hari, one question. Is this 44,800p which we bought in the morning? Are you going to talk on that, or is it altogether new trades?
Every position that I'm having right now, I'll be speaking about.
Okay, thank you.
All positions that I have with me right now, I'll be speaking. No worries on that part. I think the time was 10 o'clock mentioned, right? 9:30. Okay. Because usually people come at 10. So they told me 10 only. Because when we say 9, they come at 10. So and over here, so in our office, the trading activity happens in the cabin like inside. So I'll ask them also to explain regarding the algos, everything they're running.
So you'll be in the live for like the next 1-2 hours or like quick?
I'll live like as long as we have opportunity, we'll be live. Okay, so I think we are getting the first opportunity. Okay, so I'm just sharing the screen. Okay, guys, everybody on live. For right now, I'm putting you on mute because it could create some audio disturbance. So now I'm putting everybody in mute. I'll give you time to ask questions. So just have a close look over here. This is the chart of Nifty that I'm I have put. Okay, this is the chart of Nifty that I have actually just shared. And I'll just zoom out and show you the levels that I have been looking at. Okay. So I'll take the daily time frame charts of Nifty. So as you guys know, like from the last 1.5 weeks, last 1.5 weeks, the markets have been looking like bearish. It is more or less in the bearish territory. All of you guys like drink sugar, right? No sugar. Badriyada, uncle, ellarkum Mosambi juice, like 3 with sugar, without sugar. Ellarkum barno, official ellarkum barno. You guys want breakfast? Something? Bread omelette? Bread omelette? Vegetarians? No vegetarians, no? ഒരു കാര്യം ചെയ്യും എല്ലാവർക്കും ബ്രെഡ് ഓംലെറ്റ് ആ പുള്ളിനെ വിളിച്ചു പറഞ്ഞാൽ പുള്ളി ഇവിടെ കൊണ്ടുവന്ന് തന്നോളാം ബ്രെഡ് ഓംലെറ്റും മുസാമ്പി ജ്യൂസും വരട്ടെ നീ എല്ലാവർക്കും പറഞ്ഞു നിങ്ങൾക്കും പറഞ്ഞു നിങ്ങൾക്ക് എല്ലാവർക്കും പറഞ്ഞു നീ പറഞ്ഞാൽ മതി I'll go run and kanikam. Yeah. So I'll just tell you the agenda would be as I mentioned to you, I'll show you the discretionary trades that I'm taking, and along with that, the trades that my team is actually taking with respect to algos, with respect to advisory, all those things would be discussed. And something I wanted to mention is right now the account that I'm showing is a base account, 50 lakh account. Now, if you have a look at our social media, Twitter, LinkedIn, all those places, the P&L, the verified P&L that we are actually sharing, is with respect to this account only. Okay, so always whatever live trading session we conduct, we show this account only. This is my dad's account. Yeah, so this is the daily time frame chart of Nifty, and as all of you can see over here, markets have been in a bearish territory. Just have a sip. Has been in a bearish territory for the last 1.5 weeks. Okay, for the last 1.5 weeks, I see for myself markets have more or less been in a bearish territory. So I am marking some levels over here. For better understanding, I'll switch to hourly time frame and show you. Okay, so I saw for myself Nifty was finding a resistance over here. So if you have a closer look, this was initially acting as a support. Then like slightly lower level here, it was acting as a support. Okay, then this all support level was tested over here also. Now, if I come down, if I move to a later point in time, I see that this old support level converted to new resistance level. So in the markets, we know that there is this particular concept where an old support level can actually be converted to the new resistance. So this is the region, or these are the levels that I'm watching, and it is not like I'm watching from today. I'm watching this one so long. So I think last time you came also, we discussed the same. So he was here 1.5 weeks back. For one meeting. So that time also we were looking at the same level. So what I wanted to say is, many people ask like, how often do we kind of actually have to keep changing the levels? So it is not like that. You don't have to change it regularly. So most of the times the levels that you look would actually be repeated at a later point in time also. So this is one instance like that. Okay, just a second. I just have to switch on algo. So speaking of the concept of an old support level being converted to the new resistance. Then again, last time market actually picked up, it formed an all-time high, and we know for ourselves that market has been extremely bullish, right? So until 1.5-2 weeks back, it was extremely bullish. It was continuously forming highs. I'll show you in the daily time frame. Market was picking up like a rocket. Just look at this. From here onwards, after finding a support somewhere at 19,200, we just realized for ourselves that Nifty was more or less behaving like a rocket. It was just keeping on. Keeping on shooting up. It was shooting up like crazy. We see that, right? After that, what happens? It forms a high over here. First sign of bearishness we saw over here. I can't call this as a bearish candle. I can't call this much of a bearishness. Why? Because as compared to all the bullish candles that was formed, this was like, could be a small profit booking, but the next day it was a gap down, and then from there on, kind of sell off started. Now it is finding a support over here. And let me tell you, right now where Nifty is, that is 19,600. This is a make or break level. Why I say so? It's simply because of the fact, just have a look over here. So this has been one particular region of strong support. So if I have a closer look, this more or less has been a region of very strong support. And after that, this level got broken, it came down and found a support over here. So in the last bullish phase, markets were actually picking up. It was like picking up like a rocket. Now again, it is falling back to the old support. There is this particular concept called as history repeats itself. So something that has actually happened in the past, if a similar kind of situation happens in the nearby future, we can expect it to respond in a similar manner how it behaved in the past. So here, it would definitely hold as a support level or as a support zone. But what if this support level is actually getting broken? So I think our algo has started. So today, Bank Nifty algo we started. But unfortunately, Varun, Bank Nifty monthly expiry is still tomorrow. But it's fine. It's fine. Monthly expiry is month end, but it's okay. You can explain. Yeah.
Yeah.
DK would be good. Yeah.
Okay, so we have explain channel.
Yeah, sure. So this is Varun, and he handles like our algo rolling straddles in Nifty, Bank Nifty, and Fin Nifty. Okay, and this is actually our strategy that starts at 10 o'clock.
Yeah.
So now it is 9:59, and I think he'll be the best person to explain because he's considered to be the father of this algo.
Okay, so there has been a margin shortfall, I guess.
Intraday lot to bet.
Okay. Okay, so this is our platform, algo trading platform. So we have our Nifty strategy, Fin Nifty, and Bank Nifty, so which is kept on hold. So basically, what the strategy does is it's a rolling strategy, identify strategy. So so usually the entry is at 9:30. We can fix the entry time anywhere we want. So
we're basically going to get started with straddles at the money short straddle in Bank Nifty.
okay, so here we can input the timing. So basically, this website is open for all. So like if you are interested in creating a strategy, you can also create your own setups. So we have a start time, end time, and we have the leg edition. So here. So the straddle would be a sell, call sell, as well as a put sell. So it's an at the money strike. So at the money, and we have so the strategy we for this strategy we look for the theta decay. So this is run on expiry days, and like so the overall stop loss that we have put is on the combined premium. So it would calculate the combined premium, and we have put 12.5% stop loss on the overall, and SL on re-entry is limited to 3 re-entries. So after 3 re-entries, the algo would shut down. So and the maximum stop loss is set at 2% on the total capital. Okay, so we can put the days to execution and I'll put it as Wednesday. So right now, the why the order got rejected was like when through the platform, the sell leg would be through intraday orders. But like when I bought hedges on our master account, like I did a regular order, so which is why the order got rejected from the website. So all we have to do is just convert.
Yeah, when it kind of comes to the algo, let me tell you, the focus is on research. That is, we actually work on data. We figure out what kind of logics have worked in the past. So now if there is a logic that has worked in the past, then we develop an algorithm based on the same. Then later on, our job or our role is only on the execution part. We seriously don't have to focus on looking at the charts or anything. So once we switch on the algo, that's it.
Yeah.
We seriously don't have to work on executing the trades, all those things. Algo takes care. So most of the time will actually be put in developing the strategy and also backtesting how the strategy has worked in the past. So as I mentioned to you, there is this particular concept that something that has actually worked in the past or history tends to repeat itself. So since it has worked in the past, if the market conditions are kind of similar, we expect it to work in the future also. So that is our logic. So, and once again, here also we focus on the risk management part. So we make sure that the risk is always under control. So as Byron said, we ensure that on no particular day we are losing more than 2% of the capital on our algo trading systems also. So even if the algo is going for a toss, market is extremely volatile. We just
Short
make
follow.
sure that in a short follow, yeah?
Hmm.
Just show in some other account.
Yeah.
So what happens is risk management is always under check. So 2% will be the max loss that we will have to take, not beyond that. So if the things are in our favor, we try to make like around 1%, sometimes 0.5% if it is on an expiry day. Now this particular system, the maximum drawdown it has taken as 12%. That is in the past. So when we speak about drawdown is nothing else but a phase of time when the strategy gives you back-to-back losing trade. So that can also happen. So how we do or how we at our company manage this, rather than having one single strategy that we run, we have a combination of multiple strategies that we run, and we have like different people to take care of different systems. So even if today Varun's strategy is not working, we will actually be having Jason's strategy or Akash strategy or Aditya's strategies that is making money that would actually balance out. So generally, when it kind of comes to trading, one particular trouble that most people face is every strategy out there will actually have a phase of time when it is making you loss. Huh?
So 44,300 is at the money. So it would check for the nearest, at the money premium, and the algo would take it. So we just took one lot, and currently, like it's running in just. So this is a 1 lakh account. So basically, currently
This is a base account.
base account.
Base account means
0.1% loss.
that will be the lowest capital for that category. So now there would be this particular algo can be scaled up to 20 lakhs also. So there will be systems. This logic would be working on 20 lakh accounts also, but it would be working on a multiplier. So that like we are giving this algo for different clients who actually want to. We give the software infrastructure.
Yeah.
This is connected to DMAT Shunya.
No. See, this is, I'll tell you, we are not like dependent on any particular broker as such. So we have like, if you want to do the strategy on any broker that you want, you can. So it's completely up
The
to you.
interface looks somewhat.
This is First Stock.
This platform is for First Stock.
So this our website supports First Stock, Zerodha, Angel One, and Fires is coming soon. So you can just you can just log into through this website, and then you can just start.
So basically, like if individuals are there who want to like automate the strategy, they can use, and multiple platforms are there. So we focus on developing the strategy, the logic, and we deploy it for us. Now there could be people like you who want to automate it. You guys can also think about automating it. Okay. So yeah, I think I can just move forward now. So this particular strategy, this is one of the systems that we run, and I just quickly showed you how it is running on a base account. So right now we have just got started with the straddle Bank Nifty. What was the strike?
44,300.
44,300. Okay. So now let's get back to our trading and let's see what our positions are doing and how the markets are looking. So I hope my screen is visible. Yeah. So I just share the charts of Nifty. Okay. So again, the bearishness is continuing. So we were speaking that market has been looking bearish. Now today also the bearishness is continuing. In the hourly time frame, let's have a quick look. What is this pattern called as? Maribuso. Maribuso is basically nothing else but a pattern where exactly from opening, the price continues to fall down. Okay. And generally, these kind of Maribuso patterns we actually observe when the selling pressure is too intense. So today there has been no sign of bullishness yet. It has been continuously taking a drop. And this is the opportunity we were speaking about, and unfortunately we missed it out. We're speaking about this case where the price actually comes back and tests this level. Quite unfortunately, like we missed it out, but it's okay. Okay, so this was a scenario where after breaking this level, price came down. Then the old support level again acted as a resistance. It faced rejection from here. This was the thing I was speaking about. Okay, but yeah, bad luck. We missed it. Okay. So it is continuing to be extremely bearish right now. So now the question is, can I go for a short over here? Can I enter a short trade right now? The answer is no. I'll tell you why. If I go for a short right now, I'll actually have to create a sell over here with my stop loss at this particular level. Okay, so when we speak about a downtrend, this is the typical characteristic of a downtrend. So we have a swing low. So we have a low forming. Then we'll actually have a high forming. Okay. Then again, the price will actually just continue to fall down. Here, another swing low, so we can actually just observe. And then maybe the price will actually pick up, form a small swing high, and from there, again, it will drop. So every single time there will actually be a low formation. The low should be lower than the previous low. And every single time there is a high formation, the high should be lower than the previous high. So a typical downtrend is nothing else but a combination of lower lows and lower highs. Now, it is already bearish. And as far as my positions are kind of concerned, that will also be fine with it, more or less. I'll just share my screen. I'll show you the current positions that I have running. Okay. So right now we have booked a loss of almost 44K and we have like around 76K that is running. That is net on net, we are running at around 35K. I'll just click on the analyze button so that you can see in a more efficient manner how the positions are looking like, both in Nifty and Bank Nifty. So this is the platform of Sensible, and if you're a Saroda user, this is free to use. Okay. So these are my positions that is currently running in the case of Nifty. Okay. So for Nifty, I personally have sold the 19,700 call option. That is on the bearish side. So Nifty, my positions that is running right now is on the bearish side. 19,700 call option sold and 20,100 call option bought. That is just a hedge for margin benefits. Okay. So if markets are continuing to drop, so in this particular position, by tomorrow, I will be able to generate around 20K, not much. Now, with respect to Bank Nifty also, I'll show you. So these are my positions that is running in Bank Nifty right now. So yesterday when I was actually, so today morning when we came, our P&L or our profit was around 75K, right? Our running profits was around 75K. And with this particular downside dip that kind of actually happened, the profits have reduced from 75K to almost 35K. Because my position was non-directional. So how many of you are familiar with what is non-directional? Non-directional, yeah. So non-directional trading can be of two categories. One is directional trading and non-directional trading. Directional trading means we predict the direction and then we take the trades. That the market will be bullish, bearish, like that. Non-directional trading means we actually predict a range. We expect the market to stay within a range and then we take up our trades. So the overnight positions that I started off with was more or less non-directional. So when the markets actually went for a dip, the non-directional started giving me loss. That is why my profit decreased. So today, now again, Bank Nifty is to continue bearish. I will actually generate some very good profits. If it is to continue going bearish. Now, if it is to say sideways or if it is to go bullish, I'll be in trouble. So what are the positions that I have for now? So this is my question to you. Right now, the positions that I have are what? Bullish, bearish, or sideways? All bearish. All bearish positions are there. Now, I know that if market is to go bearish, I won't lose money. I'll make money if the market continues to go bearish. So what is the only thing I should be afraid of? Market going bullish. So as a discretionary trading, like as following a discretionary trading system today. So what kind of discretionary trade should I look for? Bullish or bearish? Bullish. All my outstanding positions are bearish. If market goes bearish, I'll make more money. I'm happy. So I don't have any greed because my positions are set up in such a way that I'm to make money if the markets are to continue going bearish. I will have trouble only when the market goes bullish. So this is one big mistake many people do. You would be in the right direction of the trend. You become overconfident. So this is not the start of the downtrend. At the beginning of the day, the market was bearish. Then again, it picked up, it tested this level. That time we were actually at our peak profits of almost 75K. Then from there, again, the market started dropping. We had short positions in Nifty that was continuing to make money. Our non-directional systems in Bank Nifty, it lost a good chunk of the profits it made overnight. And it started coming to a profit of almost 15K. Now, again, it is bearish. So our positions are more or less on the bearish side. Now, Nifty is bearish. Bank Nifty is neutral to bearish. If it continues to going bearish, I'll make money. Stay sideways also, I won't make any extra money, but whatever I have, I'll have it with me. That is right now what we have is net on net, we have around 31K. That will continue to stay. Okay. So should I actually go all in and again build on bearish positions? Already meaning seeing that market has already been bearish. Should I build on more bearish positions? I can if I want, but that'll actually be a little bit risky. Because see, I know if it is to fall down, I'll make more money. Now, again, increasing my exposure on the bearish side, I don't think will be good. Else, though, I should have gone short over here. That is something that we were initially discussing. I should have gone short over here on this rejection. So, what is this price action over here? This is a bearish engulfing, right? So, this is a bearish engulfing that we observe. Also, this is an old support level that acted as a new resistance. We had a small inverted hammer kind of candle. Then we actually had a bearish candle that engulfed within itself the previous small bullish candle. Then good sell-off came. Else for me to create short, I should have done over here. But unfortunately, when Varun was explaining, I missed out on this. Before you came, we were just speaking about trading this, but we missed out. So this could have been one good discretionary trade because risk reward is good. I'll explain it further once, then I'll move forward. Risk reward is good in the sense, if I go for a short at the low of this particular candle, yeah, please come, yeah. Then my stop loss is actually going to be at the high of this particular candle. I can keep a stop loss over here and I can actually go for a short at this particular location, expecting it to come down. So my risk is like very nominal, but the reward that I can look forward is like pretty good. So whenever we are trading Nifty, we make sure that on discretionary trades, our risk is like max to max like 50 points and not beyond it. Because taking a 50-point risk, targeting like 100 points is possible. But taking a 100-point risk, targeting for 200 points in Nifty is not so easy to capture. I'm not saying it is impossible, but capturing that kind of a risk reward is difficult. Okay, so again, it is continuing to go bearish. And now let's have a quick look at our position. So naturally, what should happen? Earlier, we were looking, it was a 30K. So what should happen? Profit should increase or decrease? Increase, no? So now it is at 35K. You are right. Our profits are increasing with a bearish move. So that's why I asked you, should I build on to my bearish positions now? I don't think so, because I'm not getting a good favorable risk reward ratio if I build on to my positions right now, because already market has dropped that much. But let me tell you, by any chance, if we were able to go for a short over here, we would easily have made like another extra 20K, 30K. If we build our positions exactly at this particular rejection. But now it is not a good idea. So today, my focus will actually be on looking for what? Bullish positions discretionary. I'll look to trade reversals. Because that is what is actually going to help me. Just like you take an insurance. Okay. Just like you take an insurance, we'll actually look forward for trading reversals today. We'll wait for the price action to show reversal and then we'll go for longs. Now, with respect to the Bank Nifty ATM straddle that he showed you, that would have actually gone into loss right now because market dropped after our entry. Okay, I'll ask him to come and show how it is happening. I'll explain about that logic also. Now, so for us to trade reversals, what is the concept that is most important? So you guys can actually pay full attention to this because this logic applies everywhere. This can be used for investing. This can actually be used for trading, trading whatever asset you want. That is, you can actually, yeah. So you can basically trade, sit here, no?
Yes.
Yeah. So you can actually use this particular concept to trade commodity. You can use this to trade equity, whatever you want, you can use. Only thing is time frame will be different. Okay. And this particular thing is what we refer to as change of character. Okay. Change of character. Now, people call it different things, reversal, change of character, whatever you want, you can call it, but the logic is the same. So I'll just write it down. I'll just show it to you on the whiteboard first. Always, I emphasize on this concept too much because let me tell you, understanding of this concept can actually help you come out of a position at a good time. Okay, that rather than you taking a deep loss and then exiting, this will actually help you get an understanding of when to come out. That is very important because everybody enters, but they don't come out of the positions. Because exiting positions is also very good. Now, what if I tell you I'm sitting all on cash right now? That is on a 50 lakh portfolio. Why this is important is because this will tell you when to exit out. Just have a look over here. So this is my base account. Shivaprasad is my dad. Okay. Last time you came, we had positions, right? Yeah. So if you have a look over here, this is a 50 lakh base account, and this 50 lakh base account is all on cash. Okay. 30 lakh in cash, and the rest of the money almost, I'll show you the margin used. 30 lakhs on cash. Where is margin used? So here, if you have a look, 3.5 lakhs is used over here. That is 30 plus 3.5, 33.5. And in Bank Nifty, we have used like around 15 lakhs. Okay. So all together, I think something more is there. Ledger balance is not 62. Okay, so 21. Okay, 21 lakhs is basically the margin that is used right now, and we have a free margin of almost 40 lakhs. Okay, so this is including the profits that we have made. I'll just show you the profits also. If you have a look at the ledger report, we are making around 8.5 lakhs. Okay, that is excluding today's P&L. So what I wanted to say is I exited out, or we actually exited out all our portfolio, all our cash holdings once again based on the same logic. So people ask like, how long do I hold on to this? When should I exit? Once again, our exit is done on exactly the same logic that I'm explaining to you. Okay. So let me tell you a typical uptrend. This is how a typical uptrend goes and how much ever advanced the markets might become. Once again, let me mention how much ever advanced the market might become. Any particular uptrend would look like this. It would be a combination of highs and lows. So today I was explaining with respect to lows and lower lows. There would be a high, there would be a low. There would be a high, there would be a low. There would be another high, there would be a low. There would be another high, there would be a low. So any particular uptrend out there is going to be a combination of higher highs and higher lows. Even in 2050 or even 2100, this is the pattern. Uptrend market is not going to go up like a rocket. If it is going up like a rocket, then something is wrong. Okay, that won't sustain. Just think that you are a businessman and today you are earning 100 rupees or 1000 rupees per day or 10,000 rupees per day. All of a sudden, tomorrow you are making 10,000, 100,000 rupees or 50,000, 500,000, that is 5 lakh per day. Directly from 10,000 rupees per day, your revenue jumping up to 5 lakh rupees per day. Then though some disturbance is there in the pattern, right? So just like the sanitation business boosted. So people would have made money during that particular phase of time, but that is not sustainable. So maybe each one of us would be buying some 3 packets of sanitizers on a monthly basis, so 5 or 10 or 5 packets. But do we buy 5 packets now? No. But maybe now we are buying 1. So something that shoots up drastically, that won't sustain. It will always be a slow and steady growth, whatever it might be, business or trading, anything. So same way when the markets are moving up, this is generally what we refer to as a typical uptrend, a combination of higher highs and higher lows. I don't mind repeating this concept 100 times because if you know this, you can enter and exit without getting hurt. I'm not saying you can make drastic money, but you can manage to protect yourself from injuries if you know this. So higher highs and higher lows is what we refer to as a typical uptrend. So as long as every single time there is a swing high that is getting formed higher than the previous high, and every single time there is a swing low, this is a swing low, this is a swing high. And the swing low that is forming, that is also higher than the previous low. I say that the market is in a typical uptrend. Now let's say at some point in time when it was continuously forming higher highs and higher lows, it starts forming a new high, but the next time there is a low that is getting formed. This is lower than this particular swing low. Again, it is forming a high. Again, it is forming a low. But now what I realized for myself is, initially, if it was forming higher highs and higher lows, this time it is actually forming lower highs and lower lows. So something that was continuously forming higher highs and higher lows, it starts forming lower highs and lower lows. So what is this? What do we understand from this? We basically understand from this particular concept that I'll just quickly get back to the charts because let's not miss out. Nothing is happening. So there is another swing low that got formed. I can say that right now this was a swing low, swing high. Again, there is a swing low that is getting formed, small swing high. Okay. So let me get back to the whiteboard now. I think it will take some time, continuing to be bearish. So what should have happened with the profits? What do you think would have happened? So since it formed a small swing high, I will say not much of a variation would happen, but still let's have a quick look.
The positions are more on the sell side, right?
Yeah, right now our positions are on the sell side. That is why I told you we'll actually look for reversals. So right now it is still at 33. From 35, it came down by 2K. It's not a variation. So we're running at almost half percentage profit. At the beginning of the day, we were like 1.2, 1.3%. Now we're running at almost half percentage, slightly more than half percentage. Yeah.
What I meant to ask was, are you on a sell position? Like you have sold an option or have you?
Our positions, so all my positions are always hedged. Okay. Now let me tell you, when you are basically getting started, okay, when we are kind of actually getting started, we actually just directly get started with directional, only shorting future, only longing future, like that. But right now, how I kind of actually do is I told you in the beginning, we have a multiple set of strategies that we deploy depending on the market condition. So when multiple strategies actually come in, there will be multiple strikes that is actually traded for the same purpose. So right now, if you have, so you have a look at the payoff. I showed you the payoff. In Nifty, I'll make money if the market is to fall down. Same way in Bank Nifty also, I will make money if the market is to fall down. So I have positioned myself on the short side. Okay. So that is the reason I told you I'm keen on looking only for reversals right now because my positions are all on the short side. If it is continuing going bearish, why should I do anything? It'll just increase my profits. Okay. Now another thing is I can increase my exposure on the short side. Again, I can create more short positions, which I'm not so open to do right now because I know this itself will actually generate me good profits. And I target to make like 1.5%. 1% per week is great. Okay, 1.5 now the thing is when you target for one, no. So always when you set your expectations right, you can actually pursue it. I target for 1.5, I can actually achieve at least one. So if I target for 1.5, maybe I'm not able to achieve 1.5, but I'll do one. Or I'll push myself to actually extract. Now that too many things are there. What is the premium that is there in the market? All these things actually matter a lot. And now, like I have been in a phase of drawdown for last 2 quarters. That is whatever systems I was following was actually giving me hiccups. So what happened is that I was also like playing very safe. Then only once I came out of drawdown, then I started being more aggressive. So let me just get back to the whiteboard. So over here, this particular phenomenon where something that was initially continuously forming higher highs and higher lows, then it shows a change in pattern. If it was forming higher highs and higher lows, it starts forming lower lows and lower highs. This is what I refer to as a change of character. Hi. Yeah, just long time, man. So just take a seat. I'll just ask them to bring you one more chair. Okay. Yeah. So this is what we refer to as a change of character. So change of character, okay. So some people call it as chooch and stuff, but it is just change of character, just a short form. This is what we actually need to look into in order to spot reversals. Now, what is very important over here is when you are looking at this particular pattern to spot reversals, let me tell you, more than half of the time. So when you're trading directional, that is when you're actually trading breakouts like this, whenever higher high, higher low formation is happening and you're trading entries like this, you have like almost 50% chances to be right. But when you're trading reversals like this, the chances that you're going to be right is only like 30 to 40%. That is out of 10 trades you take, almost 6 or 7 trades would end up failing. Then what is still the beauty of trading reversals? Can you tell me? So even though majority of the times while trading reversals, you end up failing, then what do you think actually is like really attractive to trade reversals still?
The small stop loss.
Exactly, small stop loss and better risk reward ratio. So here also, if you have a look at it, this is still a bearish pattern. See, there is a high, swing low, there is a swing low, and there is a swing high. This is a swing low, and if this swing low is getting broken, this would actually go for another dip. So now what would have actually happened to our profits? Again, market has turned more bearish. So this thing would have actually increased. So 32, it increased to 33. Not much of a variation, but slight increase. So if it is to continue this way, I don't have to do anything. Just continue holding. So now what I shall be keen on, or what I shall be interested in looking is, so it formed a swing low. It actually formed a swing low over here. Now let's say that the price is actually picking up from here. Okay, it'll actually form a swing high. Then again, it will actually drop. Again, it will actually pick up. Over here, it will show a change in behavior. This is where I can consider going for a buy. So rather than forming a swing low, again another lower low, if at all the price is actually to form a swing high, face a resistance over here, and the swing high level is to be broken, then I could say that, yeah, this could actually be the start of a reversal. And I can go for a buy over here with my stop loss at this low, expecting the price to come till here. My risk reward will be like 1:2. Okay. So then if the market is to pick up, what will happen to the profits that we have right now? It will reduce. But if I'm going for a counter position, I'm going for a discretionary directional buy, that will give me profits. So I will position the trade in such a way that the profits I make over here will be slightly more than the loss that I'll make in the other case. So my profits are not going to increase drastically. It will increase in a controlled manner. But if the market is to pick up, this will actually compensate for the loss that I would actually be taking in my short positions on Nifty and Bank Nifty. Because let's say I'm taking too much of a risk in the discretionary directional trade. Now let's say after slightly moving up, again market is to fall down. Then I will lose whatever profits I made in the short trade. So I don't want to lose for whatever I have made. I want to kind of control. I want to control my profit or control my loss. Yeah. So loss also I want to control, profit also I wanted to increase in a controlled manner. If I want to increase, profit should increase so fast, then I should take more positions. But then in that case, what will happen is, by any chance, I can't say my view is going to be right. Nobody knows. What if again market continues falling? Then I will lose for the profits that I made in the initial short positions. I don't want that to happen. Okay. So I'll take positions always in a controlled manner. So this particular thing is what we refer to as position sizing, and I size my positions based on risk. So right now we are actually running at 0.5%. So at the beginning of the day, we were running at around 1.2, 1.3%. So this big fall kind of actually acted as a hindrance to our non-directional trade. So non-directional, we lost the profits that we made. So now if you have a closer look over here, for the very first time today, I see that there is something like a bottom that is getting formed. Okay, here also there was something similar, but again the price picked up, face rejection and came down. So now here again it should bounce up. The next level would be here. So this is the swing high. This is the low. And if this I kind of consider to be a low, is this a lower low that formed over here? No, this was like a double bottom, right? So I'll wait for a change of character, then I'll go for a long. I'll try trading a reversal. Now, as I mentioned to you, there is only 30% chances that my reversal trade would be right. Okay. But in this particular manner, let me tell you, even though you don't make big money and big loss, you can always control your positions. I can actually just show you like. So if you have a look at this, you can actually know like how you can control. So almost every single day we were able to control on our downside. So 15 September, we were not able, but almost every single day we have been able. So I started posting this verified P&L on a regular basis starting from 8th of September. Okay. So loss controlling, that can be done. Okay. So yeah. So this is yesterday's. And just get back. So what is happening now? market is actually trying to find a support over here. So two things can happen. Either this level is going to be broken, again it'll fall down. Now, if you don't have any positions right now, you're a complete you have zero positions. If you want, you can consider checking for a short over here like this. This will be a risky short because already market has been like really bearish. You can consider going for a short at this particular swing low with your stop loss over here, targeting something like a 1:1.5. This can be done as a fresh entry. Why am I not taking a fresh trade? Why am I not taking this? I'm already short. I'm already short, so why should I do this? Since I'm already short, if this happens, I'll make more money. I need not create a fresh position. I hope you're understanding what I'm trying to say, no? So my focus today will be only on the long side. No, because already I'm positioned on the short side. And these are all normal positions that I'm carrying forward till tomorrow expiry. So this typical downtrend is continuing. Okay. I'll just show you in the hourly time frame now. So now if I had to mark some levels, I can say Nifty finds a support over here. So if you have a closer look, that is in 5th September and all, these levels were tested. So today, if market is to drop, we could actually, if continue dropping, it could actually drop till 19,550. So that is right now, it is like 19,560, 19,550. Another 15 points is the like region. Another 15 points drop, market can actually find a strong support. So now if I am to take a short right now, I will actually take that kind of a risk to make another 15 points. I don't want to do that. So it's continuing that bearish this thing only. Again, it is dropping. So you see like that typical downtrend pattern is actually continuing. So in fact, I'll tell you, by any chance we got this trade, no, it would have been amazing. This trade would have been amazing, like because the risk reward is like really good. So here it will find a support. This is where we anticipate it will find a support. Okay, so this is the case of Nifty. So since we already have something running in Nifty, I feel now we can actually just look into the other thing. So now this thing has increased to 35, 37 or 35 is actually at the same place, not much of a variation. So we could look for other things also that we can actually just look forward to trade. But as I mentioned to you, I want to trade a reversal over here, correct? So is it practically possible for you to sit in front of the screen throughout and wait for a reversal? No. So what I will do is I will actually set up an alert over here. So now since we are actually trading together as a team, up to a good extent we can do, because we have like 5 people over here who are actually tracking different indices. Nifty, Bank Nifty, Fin Nifty, stocks, stock options. Like that, we have like different people who are tracking different products, Forex, commodity. But as an individual, it is practically impossible for one person to look into everything. So if you are getting started with trading, I would highly recommend you focus only on one index. No need to focus on every index. So if you're a beginner, the best thing to do is focus only on Nifty. Why? Because the price action is more stable and volatility is also less. You can just focus only on one particular product rather than looking too many products. So now what I'm going to do is I'm going to set up an alert over here. So this is the double bottom that we were speaking about, this is basically the like high that we are speaking about. So above this, if the price picks up, I have a feeling that market can actually just continue to rise and we can get a trade with low risk and high reward. So irrespective of the fact that we are going to be successful in this particular trade, the chances are only 40%. But if it is to pick up above this, I feel that we can actually get a setup with 1:2, or maybe more than that also we can get if it continues to move up. But chances of success is less because we are trading against the overall trend. Okay, but we'll look out for this. Why? Because already I'm short. So if the market continues to pick up, my profit will decrease. So I'll compensate for that with this particular reversal. Now again, after picking up slightly, again the market is to come down. I will exit this particular position once this swing low is getting broken. I will probably lose a small part of the profits that I made, but if it continues to move up, as I mentioned to you, I'll try to target making more profits than the loss that I would generate from my other positions. So let's do that. So I think we'll just wait for another 2-3 minutes and then go forward. Any questions you want to ask on whatever I discussed till now, you can ask. Guys, like people who are on Zoom, I'll answer all questions. You can start putting your questions. I'll answer all the questions. So any questions you guys would like to ask on what I discussed till now? So on whatever I had discussed till now, any questions you would like to ask? I hope you understand the logic. And the levels is also clear to you why we are looking at these levels. That is why are we looking at the charts? Why are we specifically looking at these levels? Any questions you would like to, anything you could ask?
Hari, so looking at the overall structure,
Yeah.
You are going to a very long position, right? Right from maybe you would have taken this position a week back, or maybe 2 weeks back.
No. Not 2 weeks back. This is a status position.
So if you are definitely taken a week back, it would have been definitely option selling.
Yeah.
Right? I mean,
Needn't necessarily be.
okay. But as far as I understand, if you take option buy position, I mean, when I say options buy, I'm talking about selling an option which costs 1,50,000
Okay.
for a lot.
Okay.
After hedging maybe 60 or 70.
Okay.
Right? I'm assuming you are going by that kind of a setup, right?
Okay. I'll tell you the kind of setups that I trade. Expiry day, I trade non-directional. Expiry day. So that is Fin Nifty expiry, Bank Nifty expiry, Nifty expiry. What I do is straddles. So just what Varun came and showed you. So we do straddles on expiry day, Nifty, Fin Nifty, Bank Nifty. All these 3 expiries we are trading. So now maybe in another 3 months time, we'll start trading Sensex also. Sensex expiry also will get start trading another 3 months time. Right now, why we're not doing this? Because liquidity is not that much. And we find that there is like too much of a slippage. Okay, too much of a slippage. So we actually observe. That is the reason why we're not doing it. So why we do this strategy, non-directional specifically for expiry day, is simply because of the fact that we know the concept of theta decay is highest on expiry days. So that, and we get the best risk reward ratios for our system once again when we are trading on expiry day. On the other days, we don't get this kind of a risk reward ratio. This is the reason why we focus on non-directional purely for expiry days. Okay. Now, that is one of the things that I do. So what Varun actually came and showed is one of the major strategies that we run. At the money call and put we sell. Whatever is the premium that we are collecting. Let's say at the money call is giving us a premium of 70 rupee. At the money put is giving us a premium of 70 rupee. Or let's say call is 50 rupee, put is giving us 50 rupee. What is the combined premium? 100 plus 50 plus 50, 100. So combined premium for at the money call and at the money put together is 100. So what we do is on this particular 100, we set a combined premium stop loss, 20% of 100, which is 120. So we enter into the straddle collecting 100 rupee premium. And at any particular point in time, the combined premium increases. Are you guys following? Like not so straightforward. This is like a complex logic. Call and put we sell 50-50 premium we are collecting. If the combined premium is increasing from 100, it goes to 120. Then we know that we should exit. We should go to the next straddle. And we keep on doing this particular thing 3 times. On any day, we'll have 3 re-entries. I will make sure that at no point in time we are taking a loss of more than 2% of the capital deployed. So you just have a look at it. Now we see a slight this thing coming in. So now what will happen to our profit on the short side? It will decrease. So it has decreased to 20K. So this is why I told you now we will actually focus only on long side positions. So what if I created another short? I would have actually created too much long short exposure that with this particular upside, we are actually just losing whatever we made. So that is why I told you now we'll look only for longs. So now it is actually at this particular swing level. If it is to break beyond this, I'll look for longs. Okay. But if it is facing rejection from here and dropping down, I don't need to do anything. Okay. I'll actually start looking for longs, provided that the price is just managing to pierce above this and continue. In fact, I'll look forward today. I'll actually look forward to buy some calls. I'll kind of consider buying some 19600 CEs. Okay. See, let me tell you, I'm more of an option seller. Okay. I'm more of an option seller in the sense almost 75% of all the positions that I take are option strategies, option selling strategies that I do. Right now, my margin has been kept aside for option selling. So right now, whatever I had done are all option strategies. So right in this case, the reversal that I want to trade, I will actually try to trade it with option buy. Okay, option buying is what I'm going to do for taking this reversal, because my positions, as I already showed you, are all option strategies done on the short side. Buy side, what I want to do, I'll do with option buy, because I still have margin. So let's see. So I hope I answered your question. So non-directional I do specifically for expiry days. Now let's say the premiums are high. So deciding whether to do this as a debit strategy or a credit strategy totally depends on how much risk you think you have to take, and also how much of a strong view you have. So if you are extremely bearish, then you can buy put option and you can convert it into a debit spread. But if you are not extremely bearish, you have a bearish view but not extremely bearish, you're starting this position 1 week before, you can do a credit spread where you start by selling a call option and then later on buy an out of the money call option for hedging. So for example, this position that I have in Nifty, I'll just show you. So this position that we have in Nifty, this is a credit spread. This was a credit. Okay, now this converted to non-directional. This was a credit spread where we started by selling a 19,900 call option and we were having a 2,100 call option buy. Correct. So why did we buy the 2,100 call option? That was a margin benefit. But our view was bearish, so we sold the 19,900 call option. That is a credit spread. But let's say that I was extremely bearish on Nifty, then why will I even sell a call option? I'll buy a call option. I'll buy a put option. No? So the trades that you take will also depend on what kind of an intense move you are expecting in the markets. If you're extremely bearish, you can buy put option, nothing wrong. But what if you're slightly bearish? Better sell call option. So the positions that you take will actually totally depend on how strong your view is. So now I see for myself, markets are more or less kind of actually playing around with this level. If I go for a buy over here, where should my stop loss be? At this low, right? So let's just try putting it. If I want to go for a buy over here, I keep my stop loss below this. So this is like on Nifty, this would be like a 25 points risk. Okay. Target how much? Almost 50 points. So this will be a 1:2 trade. So let's check for this. And I'll try to trade this particular setup with, so right now market is trading at 19,576. I'll try to trade this setup with 19,600 call option. Okay, weekly option. 19,600 call option, let's add to our watch list. I'll show you the premium chart also. I'm adding 19,600 call option to my watch list 3. At the money. I always said at the money or one strike in the money. I don't trade out of the money. I always said at the money or one strike in the money. Always. So that is what I'm comfortable with. If I trade too much in the money, fluctuation will be too high. That is not comfortable for me. If I trade out of the money, that'll be like taking a lottery ticket. So always I stick with at the money options or one strike in the money. Always. So this, from the time I started trading, I have been trading only at the money or one strike in the money. I never trade out of the money like that. Let's have a look at the options premium chain with respect to this 19,600 call. So now slightly it is picking up because market is also picking. So you see, look at the price action over here. Are we ready to go for a buy yet? No, we are not ready to go for a buy yet. So what I'll look over here is I'll look at the swing highs and swing lows. So just look how how clearly the levels are being respected. Exactly at this particular point, which we consider to be the swing high over here, rejection is coming. So now, to be very honest, guys, anybody can mark these levels. Okay, and I can tell you, I've been in the markets like for almost like 6-7 years now. And after like 6 months of being in the markets also, I can mark levels like this. But trading these levels or the conviction that you get will happen over time. Marking levels, anybody can do like in a span of like 6 months, you can do it really well. But this concept is more than sufficient. And then we need to identify setups with good risk reward. So once again, let's start looking at it. So what will happen to our profits now? Slightly it would have increased. Okay. I'll look for longs above this particular high. This candle is high. So again, if market is able to pierce above this particular high, I'll go for long. I'll consider this, or I'll compare this with the options premium chart, and then I'll decide my entry point. So this is actually the options premium chart of 19600 call. Okay. And if I'm to have a closer look at it, this is where I consider the high to be. That is somewhere around 43.63. I'll take it to be 43.63 only. Okay, 43.63 is basically where I can kind of actually consider the this to be. Okay, 43.63. So I'll go place a buy order at 43.63 with my stop loss at I'll take a 10 point. I'll kind of consider taking a trade with a 10 point stop. 43.63. I'll consider keeping my stop loss at 34. Okay, 34. I'll consider keeping my stop. I'll consider going for a buy at 43.63. So let me place my order. So how much risk will I take? That is the next question. So let me consider taking a risk of 0.2% of the capital, trying to make 0.5% on this reversal trade. So that'll be like, I'll consider taking a risk of almost 10K. So one lot of Nifty, how much it is? 50 quantity. 50 quantity is one lot. So 10 points is a loss. So one lot will be losing around 500 rupees. So how many lots can I trade? 20 lots. My God. You will place a trigger buy at 43.63, no? Okay, I think we'll get an entry soon. Okay, we can consider going for an entry now only. 43.63. Okay, 42. Let's place a buy. 6,000. Okay, so I'm just placing a buy order over here. Our order will actually be pending right now. So let's see how it goes. Okay. So again, the price is trying to pick up. Let's see if we are going to get an entry. And as I mentioned to you, I'll place my stop loss sell over here. So let's just wait to see if we can get an entry. Okay. Can I contact you? Yeah, you guys can actually just get in touch with us. You can connect on this number 89211365661 WhatsApp number. This is our customer care. You can just text a WhatsApp message over here. So I'll wait for this high to be taken out for my entry. Okay. So if this high is getting taken out, then my anticipation is that price could just continue picking. Okay. If this high is getting taken out, my anticipation is that prices just continue picking up. So let's see. So I would say that right now there is like a tug of war that is happening over here between the buyers and sellers, deciding whether they'll permit it to go for a reversal or they are not going to permit it to go for a reversal. Okay, so let's see. So this is the situation right now. Let's see. So why reversal? Even though we have less chances of making money, because risk reward is very high on reversals. Risk reward is very high on reversals. That is the reason we are also looking for reversal. Even though less chances of you making money in a reversal, risk reward is very high on a reversal trade. This is in fact the reason we actually look for reversal trades.
Question.
Yeah, go ahead.
So when you place this order, right?
Hmm.
So your trigger price you set. Now, how do you set this stop loss in this?
Stop loss is
Like,
based on the
10
swing low.
points.
Stop loss is based on the swing low.
No, I
Yeah.
that when you placed it on the chart or on the
Stop loss also is SL order.
you sure?
Yeah, why not? As soon as I have the entry, I'll go for my SL order. Same way.
Or once
Just
you have an entry
yeah,
is when you
yeah,
that shows.
yeah. Not once, not if I want, I can place now also.
You sure?
But I'll actually take too much of a margin because that will be considered to be a naked sell position. Now order has been purchased. Okay, I'll show you. So 43.6, if you have a look over here, let's have a look at our order. We have got a fill over here. 43.75 is the current traded price. Where is it? You want me to show you how to place a sell order, right?
Yeah.
19,600 call option, 43.6 is where we entered. So for me to place a sell, I should click on the sell button. How many quantity? Once again, 1,000 quantities. Okay. What is the order type? We entered with the delivery order, right?
Yeah.
So sell also should be delivery. So here again, advanced order, stop loss, trigger price, 43.6 is what we did an entry. So here I'll actually go for a sell at 33.6. Now let me just check with respect to the premium chart. So 33.6, where does it fall? It would actually come somewhere over here. Okay, that is actually below the swing low only. So 33.6 or 33 I can go. 33.6 limit price, I'll actually keep it to be 30, I'll keep. 31 also I can keep, no problem. So 1,000 quantity, 33.6 is my trigger. So this particular sell will actually come into place, or this sell will actually be triggered only when the price comes and touches 33.6. So only once the price comes down and touches 33.6, we'll enter into the short. Till then, our order would be pending. Okay, so I'll place the sell order now. So now if you have a look at it, I have this particular sell that is actually pending. So once the price actually comes down and touches this, once the price actually falls down and touches 33.6, that is when the order will be fired to the exchange. Till then, the order will actually be pending with the broker. So why I said I will place this sell order after my entry is simply because of the fact that when I'm going for a buy, what will be the margin required? Margin required is only the premium into quantity. But what if I'm going to go for a sell? That will be considered to be a naked sell. Naked sell, the margin required is going to be higher. So since I'm already utilizing a good chunk of my margin into the short positions, if I again go for a sell, that'll be considered to be a naked sell because my buy entry has not been happened yet. Naked call option sell will be considered of 1,000 quantity. So then I can actually have an issue, margin issue. That is the reason I said first let my buy fill, then I'll show you how to place a stop loss order separately. Now let's say this was my fresh position, then no margin issue. Initially only I can show both. You get what I'm trying to say, no? Because if you place buy order is pending, sell order both are pending. Buy order will be thought of as a separate order, and the sell order will be thought of as a separate sell order. So this will be considered to be a naked sell order that is pending. So the margin that is going to be kept away is going to be huge. And since I have other systems also running, if I place that order, the margin gets blocked. Maybe the other orders that is basically being fired from our team could not pass through. That'll create margin issue. And during a trading day, to be honest, this particular thing that I'm showing, is extra. Whatever I'm showing you right now is actually extra from what we are actually doing. So when this margin is going to be kept aside, these guys don't know how much margin I'm using. They don't even know what trade I'm taking. You get what I'm trying to say, no? So when that margin goes, maybe there could be errors. There could actually be errors that is forming in the trading. I hope you understand what I'm trying to say. So now it is exactly at our entry only, 43 only. Not much of a variation is happening. I think I'll take some questions from your side right now. What could be the parameters to look for reversal after this kind of a fall? So as far as I'm kind of concerned, I'm purely looking only into the price action part for now, nothing else. Okay, nothing else is being looked into, only into the price action part for now. Now, when it comes to looking into the systems or algos, all the stuff that we develop, we have multiple parameters. Like we look into the open interest, we look actually into the options, open interest, like multiple factors are being looked at. But practically speaking, for discretionary trading, only two things that I majorly look at is one, I look at the significant levels. And significant levels, though I look at it, it's not that I look at it today, then I decide. No, these levels that I'm looking at is something that I'm looking at for the last couple of weeks. I continue looking at the same levels. Then I look at the risk reward that I can potentially capture if I want to take a trade over here. Okay. So that is the thing with respect to discretionary trading that I look at. When we're developing strategies and all, we look at too many things. We look at how markets have behaved in the past based on this logic. What has been the drawdown? What is the probability of success? Too many things we look.
I think, when you're actually looking at the overall picture, if you say, I would consider this.
Okay.
If we are only trading intraday,
Mhm.
so probably our view and perspective about the
Yeah.
entire thing would be different than
Yeah.
looking at
Positional.
position.
Yeah.
Right? So from what I get, talking to you is you're looking more from a positional side, which you want
Not actually, not actually, not actually. I'll tell you. So it is basically more or less like, for me, every trade is separate. This intraday trade that I took is bullish, but I showed you today morning all my positions are short. So I seriously don't have a bias. Okay, this is a very important question that you asked. So let's kind of actually say that you are taking a short trade. Intraday you took. Now you are speaking to somebody who has taken a long trade on positional. You will actually start feeling, did my view go wrong? Because this guy is long. Why? Because he has taken a long positional trade, whereas you have taken a short intraday trade. So intraday trade, positional trade, or a swing trade that I have, everything are separate trades. I consider every trade to be an individual trade. Every trade has an individual risk and individual reward. So if I had taken a long position over here, it has nothing to do with my short position, that is positional. I don't mix things. I don't have a bias. So if I had a bias, okay, I have short positions there. Then I'll keep on praying, okay, let market fall down, let market fall down, let market fall down. I won't even think about entering long. So whenever you're taking intraday, don't mix it with your positional longs. So I told you like market is falling down. I told you I don't want to increase my exposure on the short side, due to which I don't want to create extra shorts. I am more keen on longs. Why? Because I'm already having shorts positional. So don't mix intraday trading with positional trading. Don't have a bias. You get what I'm trying to say? Maybe the chicken biryani in that hotel is good. Doesn't mean the fried rice needs to be good. So that is how you kind of actually create a bias. Generally, in personal life or professional life, we have biases. Just because chicken biryani is good, you expect their mutton biryani or their chicken fried rice to be good. But is that how it works? No. Maybe they're good only for chicken biryani. So same way, if I have a positional short, that trade has a risk and reward that is already known to me. So this is at 47 right now. We entered it at 43. Yeah. So if you have a positional trade that is on the short side, that has nothing to do with your intraday trade. Both trades should be considered separate. So if you start mixing all your trades, no, then you have only one trade, or you kind of keep adding more and more positions to the bias that you have. And this is actually one place where people get stuck. You are on the short side. You expect it to keep on falling down. Why? Because you created a short position. That is not how the market works. Maybe you created a short position on the positional, but on the intraday, you can look for reversals. So don't create biases based on your positional swing like that. I had taken see one position that we are running is only Lloyd, no? Only Lloyd is the only equity that we are having running. Lloyd, though, we are still holding it because our bias is still bullish. Even though market fell down, since we actually had a bullish bias on Lloyd, we're still continuing to hold Lloyd. Everything else we exited. So now, since I have a long position in Lloyd, doesn't mean that I should take longs in Nifty. I'm short on Nifty. So every trade is separate. And that is actually how we manage the risk, no? Else though, when we are making money, everywhere we'll make money. When we are making loss, everywhere we'll make loss. And that is psychologically difficult to handle. So every trade, you assume it to be a separate trade. It has nothing to do with the previous trade, or it has nothing to do with the next trade that you have to take. Maybe in the next trade, I take a short. It has nothing to do with the previous long we took. So every trade has a separate bias. And you should think like a machine. For that, you should actually just remove this attachment part of psychology, like, yeah, you should emotion part. Never get attached to a trade. The trade that you're taking is based on your analysis. If it is bullish, take a long trade. If it is bearish, take a short trade. So just because you took a bullish trade before, don't think that next trade should also be bullish. That is there because since we took a bullish trade, why did we take a bullish trade? because we expected market to move up. Now we are not ready to move on. We are not ready to accept the fact that our view went wrong. We should take a short trade. We'll still justify that, okay, we should take a bullish trade because the previous trade was also bullish. So don't have that bias. Every trade consider separate. Okay.
I actually didn't complete the question.
Yeah. Go ahead. Sorry. I gave you a big lecture. Yeah.
So, what I was asking is, when your view is a little bigger, like say for example, a week.
Okay.
Okay, so a week back itself, you have to do your analysis about what would be your range.
Yeah.
So I actually wanted to understand how do you do that analysis of marking the range where you would actually be selling your positions, basically, be it a straddle. It would be a straddle, it won't be a strangle, right?
Straddle we are doing, yeah.
Yeah, so a week back, how do you analyze that, the market may be in this to this range? And how do you come across those 2 points where you have to sell?
Okay. So the markets are extremely bullish, then we don't sell a straddle. That's the first thing. If it is looking like extremely strong to us or it is extremely bearish to us, then we won't actually have a straddle because that would actually go for a loss.
Okay.
But let's say market is actually, this is the high of the market, this is the low of the market. Market is actually trading within the range. Then we can consider going for a straddle, provided that the combined premium. So when we are setting a straddle, we have the combined premium. So what does the combined premium indicate? It indicates nothing else but the plus or minus standard deviation. So the combined premium of the straddle that we are selling is giving us as a 300 points or 250 points. It is telling us that market is expected to move within a range of plus or minus 250. So now if we feel, okay, this plus or minus 250 range is actually well within the support and resistance levels that we mark, then we think about selling the straddle. You get what I'm trying to say? Now let's say market is at a breakout point and the combined premium of the straddle is only 200 points. If a breakout is happening, we expect market to move 300 points. There is no point in selling a straddle. So that is actually a discretionary bias. So generally, most straddles we actually sell on expiry days. Those are intraday straddles.
For that part, because you are anyway expecting a TK, DK. So
because expiry day, I'll tell you, our logic is simple. When we're collecting a combined premium of 100, we're keeping a stop loss of 20% of the CP. That is at 120. At any point in time, the premium expands to 120. How much do we lose? 20 points. But let's say this 100 is shrinking, market is staying sideways. We get a theta of almost 100, maybe 50 points, 60 points weekend or we get. So by risking 20 points, we are bringing 60 points to the table. Risk reward is 1:3. And we do this almost thrice that day. What is the status of
It's running at 0.4%. Where we entered before, it's running at around.
So why don't better you explain? Or do you want me to? Okay, you explain. Yeah, you connect it to the screen. Also, I'll just connect. Can you just join this particular Zoom also because it's like people on Zoom? I think.
Okay.
I'll just share the link with you. Link on done already and share it. So this algo is right now like trading at 0.4%. So we'll explain like how the combined premium everything.
Evidence. Team
Livelong Wealth.
Hari, can you explain how we can tail our stop loss here? Like when we are going right.
In this.
Yeah.
Okay. Here though we entered at what? 43, no?
43.
Now it is 48. Too early to trade. Now here only, stop loss is here only. I'll tell you. So our risk was 10 points. Bare minimum what risk reward we need?
Cost to cost.
No, 1:1, 10 points move you come. Then if you are like very conservative, you can trail to your entry. Or 1:2. You can go for a partial. Then you can continue holding. Maybe this will give you 1:5 also. What was the risk over here? 0.2% of the capital. What are we trying to make? 0.4% or 0.5%. So you kind of can trail. So now it is at 48, which is just like 5 points above your entry. Okay, I would say this is too early to trail. Another 5 points you can think. I'll tell you. And I told you this trade actually has, don't be happy. This trade has almost 70% chances of failing still. That is because like this kind of trades, no reversal trades and all, chances of you failing is much higher than you making money. But still we do it because the risk reward when it comes will be very, very favorable. And link it.
Any specifics for 0 to 0, or you don't consider that at all?
If I'm making very good money and I'm feeling bored, we take Hero Zero. Okay. It's not worth my time and efforts. To be very honest, it's not worth my time and efforts and capital.
No, I wouldn't do it on a personal level too. I mean,
Yeah.
I tried, I failed 90% of the time.
Now it is working amazing. So we have this. We Sorry, guys, I forgot I was on mute. Thanks for pointing out, Siddharth. You deserve a coffee. Okay. Come to Bangalore. I owe you a coffee. Yeah. So Siddharth is from Chennai. Yeah. So what I was telling is, when we traded this particular reversal, we positioned it with 0.2% risk. I was wondering why none of you guys asked me why 0.2% risk or how we came to the number. So the logic was pretty simple. When I'm taking a 10K risk over here, I know that, okay, I'm targeting for something like a 1:2. And if the price is continuing going really bullish, maybe 1:3, something more than that. Here, though, we were able to cash exactly 1:3. Why did we exit, by the way? Why did we exit at 1:3? Rejection, because this is actually a level, and this is the first trade we wanted to take for the day. You were in there, you guys were in there. This is actually the first trade we wanted to take a trade, and if at all Varun was not explaining that time, and we were looking at the charts, we would have gone short. So this also we would have made some good money. Okay, but we didn't take because we were not looking at the charts. We were explaining Bank Nifty. We missed out the opportunity. So here we saw rejection at this particular resistance level. We exited. So 10K risk we took, we booked 30K. But what I'm trying to tell you is, what if this trade failed? I told you only like 30-40% chances that this reversal is going to work out. What if this trade failed? How much will I lose? 10K. But what if market continues to fall down? We were running at 20K then. That 20K would have become around 40K or maybe 50K. So irrespective of me losing 10K over there, I would have still managed to have around 30-40K. But now the reversal happened. Then what comes? What happened to the positions that we had running? That would kept on decreasing. That is the profit we would actually have had with the initial positions. That would have kept on decreasing, and probably that profit would have come down to zero. That we compensated with this particular 30K. So our overall P&L is still continuing to be 30K. I hope it is clear. So this is exactly the way how I actually trade most of my positions. And that is actually the way we can actually somehow close it on a positive note. This involves discretionary trading. That is, whatever systems trading we are actually having, that will be a separate basket. And whatever discretionary trading that we are having, that though is a separate trade. So both hand in hand will balance out. So when Umeed sir came last week, I was explaining him the concept of having two business. One is a popcorn shop and one is a ice cream shop. Ice cream shop will give me business in summer, and popcorn shop will give me business in winter. But what if I have only ice cream shop? In winter, though, I will be out of business. But if I have only popcorn shop, in summer, I'll be out of business. So both business we need. So that is the reason I say we have multiple strategies. We have multiple people like Varun. Not multiple people, 5 people. Okay. So we need talented people, okay? Random people we can't take. So we had talented people like Varun running multiple systems. So if something is not working, the other will actually balance out. And this is also a way of hedging. And just like our friend was actually asking, we don't have any bias. If I'm having intraday shorts, doesn't mean that I won't have positional shorts. So if I'm short in Nifty, doesn't mean that I won't long Bank Nifty. Everything is considered separate. So, and we don't get attached to anybody's trade. So Varun is trading non-directional. So that doesn't mean I will trade only non-directional. I'll trade what I want. Okay, so now I think I'll take some questions from your end. Then we'll move to the algo. Algo is making around 0.3% profit. Okay. So Varun, can you just join Zoom? Just connect. Okay. Meanwhile, I'll take some questions. Anybody who wants to ask any questions, you can just ask me.
We decide on early morning on Telegram, you send these messages, right?
Alerts. Okay.
How do you decide on that?
So basically, okay. So multiple factors are there to it. So once again, when it comes to the early morning hours, as you guys know, the volatility is too high. Too high volatility we have. So now there is this concept called as an opening range breakout or ORB. So we see like first 5-minute high and low. So first 5-minute high and low of the markets. If the high is getting broken, we go for a buy. If the low is getting broken, we go for a sell. So today also, when I actually showed you this particular trade on the call option side, when I was actually showing you this particular trade on the call option side, where did we think about going for an entry? We went for an entry at the high breakout, right? So high of the premium. And where did we plan to keep our stop loss? At the low, at the low. And when I was keeping the stop, okay, one important point. When I was keeping the stop loss, when we went for an entry at 43, no, when 43, when we entered for an entry at 43.6, did I keep my stop loss exactly at the low? That is at 36.7. So 43 to 36, how many points? Only 7 points. But we kept a stop of 10 points, right? So why? Because premiums will be highly volatile. Okay, so buffer we always keep. So same way in the morning trades that we have, we majorly look at ORB. Now you could ask me the question, can I take those trades? Answer is no. Because if I punch that order in my system, no, when we are like F&O, direct execution, we are doing almost much bigger capital. By the time I enter itself, price will move. Hi, long time. So by the time I kind of actually enter it, so there would actually be a moment. So it seriously won't make sense for me to enter those kind of trades, because by the time, because this should actually be fired like really soon, and you should actually be really sharp. To be honest, me as a person or my personality is not suitable for taking such quick trades. So I personally would actually love taking a trade where I had to wait, watch, then take. Just like what we did now. And that needs patience. So those kind of trades are what I am comfortable with. I won't be like so comfortable in taking like quick entries, quick exits. I can't do that. So you should have to figure out like what suits you. So I have a guy called Akash. We can ask him after this. Now.
In terms of you send like daily watch list and
Yeah.
stuff, right? How do you decide on that watch? Is
Okay,
there something I can do
okay,
in
that's-
this day to
okay.
Check that.
So to be very honest, there is no particular methodology to cherry pick stocks. Now, once again, when we are actually regularly tracking Nifty, Bank Nifty, all those things, I showed you the levels that we are looking at. So these are the levels that we are majorly tracking. So we are expecting market to open somewhere within this range. Then we know that these are majorly going to be the strikes that we are going to trade.
Okay.
And always I told you, you asked like, how do we select strikes? And I told you, always I trade at the money options. So strike selection, that headache is gone. So now you do not keep the strikes ready also. So I also added to the watches now only. Correct. So it's not a tough thing. Just have a look what is at the money and then trade. Then one more thing I wanted to tell, make your trading system or your trading strategies as simple as possible. The more you complicate it, your results are not going to improve. So simple things work. But if you are planning for 1:3, take 1:3. So for example, I'll tell you generally what most people. So I have like we had today morning around 233 people joining the live. So now the number has dropped to 150. People would be having work, multiple commitments, they drop off. Now there could be n number of people who would have taken. How many of you guys took trade with me? How many of you guys took this trade? Let me know through the chat box. So how many of you guys took this particular trade with me? Let me know through the chat box and let me know like how much profits did you make? How many of you guys took a trade with me? How many of you attended over here and took the trade? Anyone? Oh, you guys took. So how much profits did you book? If you guys don't mind.
On one lot, 1,000.
You booked 1,000. Okay, what about you?
No, actually, I was more into this or this exit.
Okay. What about you?
I just, it was a Bank Nifty figure actually.
Okay.
And around 300, 400 bucks
Per lot. That's great. So, yeah. So 10K risk, we took 30K. So how many of you guys who attended the Zoom live, how many of you booked profits? Just let me know. Oh my God, too many messages. Okay. That's great. Okay, so it's good that like many people took trade. Okay, now the thing I just wanted to mention is, out of all the people who took the trade, tell me how many of you stick till 1:3. Be honest.
I exited.
I booked on 65.
Okay, so that is like, what was the risk reward you took? Exited early. How many of you stick or how many of you held on to the trade till 1:3? I exited early. I captured only 5 points. 1:2. Dipanshu, yeah, Dipanshu is a seasoned trader. He's with me for like 4 years. Rupasri exited early. 1:2, 1:1. Okay, so now the thing is, I took a trade. I know my analysis. I was sticking till 1:3. I told you like I feel there is a rejection coming from there. It's not that I'm predicting the markets. None of us can predict. But for me, I know that if I'm trading this way, for me to make money in the long run, I need good risk reward ratio. That is the reason I stick with it. But if I give you the advice, you're seeing me trade in front of you. You're actually seeing me trade a much bigger capital in front of your eyes. Then what is that factor that is not making you to stick on or hold on to the trade?
Fear.
Fear. How do you overcome this fear? Huh? Not understanding the techniques, having your skin in the game. I can tell you read this book, you watch this motivational video, that motivational video. You will get motivation for those 5 minutes. But when again you go home, you start trading, you lose everything. So this will happen only with practice. Yeah, and one more thing is the risk that you should be taking should always be something that is comfortable for you. So even if I lose 2% of my capital today, tonight I'll have a peaceful sleep. Tomorrow I'll be the same person. And when I make money or when I lose money, my expressions don't change. It's all the same. Why? Because I'm not attached to anything. I'm not attached to the trade. Trade is just my profession. I don't have anything to take home. Whatever happens here. I go back home. That's a different person. So when you come to work, you should work differently. Go back home differently. Okay. So fine. Your second Dipanshu, his friend. Okay, great. So now I think I'll just get back. So now see that like we have rejection over here, and this rejection is more or less coming from this particular point. So ideally, what should happen with our positions? Our positions could actually have like slightly more this thing. So from 30, it has increased to 33. Not much of a variation. Okay. So now I think I'll just pass it on to Varun, and he will actually.
Should I log in from your?
Okay, just log in from my device.
Share it.
Yeah. So next, I'm just passing on to Varun. And he will actually show you the logic behind the algo, why it took the trade, everything. Okay. Yeah. Hey, put it down.
Okay, so hi guys. Hi. So I'll be just quickly updating you about the algo that we had run. So we ran a strategy at 10 o'clock in the morning, and currently it's at almost close to 0.6%. So basically today, not even being a Bank Nifty expiry, like we got pretty good theta decay on our put like 44,300 put like. So yeah, it's currently running at point.
But please explain the logic.
Yeah,
By
sure,
premium. What
sure.
is a straddle?
Sure.
How do we come to stop loss? How do we do the back testing? Everything.
Yeah. Okay, so our strategy is basically a iron fly rolling strategy. So at 9:30, so we have strict entry points at 9:30, and the exit point is at 3 o'clock. And at 9:30, the algo would be like I showed you before. We have a software, we have a platform. So our algo would punch at the money on Bank Nifty, Nifty, and Fin Nifty. So these are run on 3 separate days, on Tuesdays, Wednesdays, and Thursdays. And yes, so it is kept until 3 p.m. We basically the algo looks for capturing the maximum theta decay under that, and the stop loss is kept at 20% of the combined payment. So basically, if you check, our active average price on the call side is 172, and on the put side it's 200. So basically, the combined premium would come to around 374. Okay, so 20% of that would be the stop loss on our first strike price, first strike price. Yeah. So 20% of that of around 274. So that will come to around say 300. So basically, if the combined premium goes more than 400 points, I mean 400 rupees, the algo would close down both the legs. So both the legs would be shut down immediately. So the stop loss is not kept at one leg; it is kept on both the legs, and then the algo would take at the money at that range. So basically 44,300 is our sell price, and currently it's trading at around 44,360. Yeah. So whenever the algo closes the first straddle, it would take on the next straddle. So likewise, 3 times the algo would take such trades. There are 3 re-entries. And yeah, at the end of the day, like the maximum stop loss is kept at around 2% of the capital. So this is a 1 lakh account. So around 2,000 would be the maximum loss that we would go. We haven't introduced any target, orders in this. as like we want maximum T30K to be there, but we do have trail stop loss. So if for every 20-point fall in the combined premium, that means for every 20-point fall, like we would trail the stop loss. So 15% would be the new stop loss on that. So that we can actually save profits. So whenever it touches like whenever there is a profit of around 500 or 600, the algo will trail the stop loss. So that like we can actually survive during high spikes and all. Yeah, so this strategy is kept until 3 p.m. actually. And let's see like how the strategy goes till, yeah.
So assume that you have a strategy, right?
Yeah.
You have sold.
Yeah.
Okay, now assume that it came 1K 20 points down, 1 went 20 points up.
Okay.
Okay, your combined stop loss is there.
Okay.
Okay, so on one it would hit it.
On one?
On one,
Yeah.
say if you have kept 20 points as your stop
Yeah.
loss.
20 points is on the total premium, combined premium, not on each leg. Okay, so on the
We are not speaking about the stock mark. This thing. Explain more combined payment. I think he's confused. on that.
No. I got what combined premium is, that you are
Yeah.
adding both the premiums
Yeah.
together and putting a 20%.
Yeah.
Whatever is your stop loss.
Yeah.
Right, but when you do that, you will have to still, you have to exit the leg, right?
The leg would be exited on both, like it's algo running, right? So it will close down both the legs, PE and CE will close. Whether one is in loss or whether one is in profit, it will close. So basically, like if market goes up, obviously the call sell would be in loss. Okay,
so,
but
already.
yeah, but the put premium will spike up. So and put sell will be in profit. So basically, like it checks for the drop in the combined premium. So 20-point fall in the combined premium, it would trail. But or if the combined premium, as in the 20 points, is going up, it will exit the trade.
Okay,
So
I
basically,
got what you're doing.
Yeah.
So you are actually not placing it on the system. You are tracking it behind the scenes, right? Maybe.
Yeah.
exactly. Yeah.
No, the reason why I asked was if you're applying it, it may hit and there
Yeah.
will be one cup.
So there's multiple other parameters also that we look into. For example, we kind of really have a look into the variation in RSI. So this combined premium is actually being tracked in our backends. As we keep tracking, so you must be familiar with triangle charts, all those things. So we kind of keep tracking how the combined premium is varying from time to time. So depending on the CP vary, once again we actually just keep. Just keep off. Yeah. So we just letting a light in. Have a seat, personality. Here. So depending on the combined premium actually keeping on changing, we kind of actually keep trading in our stop loss also.
So like right now, Bank Nifty is more than 44,400. Our entry was at 44,300, which is why a profit has slightly reduced to 0.3. So this setup actually works for Nifty, Bank Nifty as well as Fin Nifty.
So this is the legged coverage.
Sorry?
This is option selling.
Option selling. So with option selling with hedges also. So we have got plus 1,000 call as well as minus 1,000 put hedges also, so that we get under the margin.
So what is the minimum capital?
1 lakh. Yeah. With 1 lakh, you can execute one lot of the strategy with hedges.
So as you are saying, it is a 1% of overall.
Exactly. Overall capital, not deployed. So in this, if we actually look at the deployed capital is actually less than 1 lakh. But whenever we speak of profits, it's regarding the capital only.
Both the positions will exit at the same time.
Sorry?
Both positions will exit at the same time.
Yes, exactly. Both positions has sell orders. Sell orders will get exited after this time, and new sell orders will come. The hedges will be in place. So this hedges also, like I showed you before, through the platform, we can actually run hedges. But like the software is still in the beta version. So basically, if you punch the run order, all the 4 orders will be thrown exactly at the same time. But in order to execute this trade, we need to deploy hedges first and then the sell orders. Then only we'll get the margin benefit.
The question is actually for 1 lakh for 1%, right?
Yeah.
So actually, I think 1,000 rupees that will be the margin, right?
I didn't get that.
for 1 lakh rupees.
Yeah.
For overall, if I put this call
Hmm.
932 would be 8 calls.
Uh,
So if I'm expecting 1,000 rupees from 1 lakh rupees, that 4 calls which are put into that might be that charges progression. Overall, that same amount.
I think he is not taking that into consideration. He is only talking about 1% of the profit of the margin deployed, of the amount deployed.
so this is actually running at 0.1% right now. 1% would be S1000. So I didn't take the charges and all. It's just them.
So this particular, I'll tell you, right now, so we have actually just brought in, I told you, like last 2 quarters, I myself was in drawdown because market structure has completely changed. So the systems that we followed also, we completely changed. So we started implementing it from this quarter. So first we kind of actually finished it off in my account, that's on the larger accounts. So there, though, we have actually picked up again. So there, though, I'll tell you, like we have booked this quarter. Right now, we are actually doing around 18%. Now we started revamping this on all the other systems also. Market is extremely bullish now. So I'll ask after this, what happened to the algo? I think it'll be in loss now.
No, still in 0.1, I guess. The market charge.
Can you just connect this down? Like down there is a charger.
It's still holding at 0.1.
So now, like we have created some more positions also the long sides. Okay, so this is another level that we have been tracking. Okay, so above this particular thing, these guys have created some longs. So what will be the status of my account right now? Loss, profit, loss, but they created longs. Other systems came in. So we are at around 50K profits right now. Okay. It'll be little difficult for you guys to digest, no? Because we are keeping on. Okay. So that's the reason I told you, man, like we run multiple systems. So it is practically impossible to have one single system and survive all kind of market conditions. So when markets are actually, so here also again the same logic. So what happens over here? Swing high, swing low, swing high breakout. Okay. Now there could be somebody who actually held on to the position, not exiting at 1:3. That is 0% chances, or 0.5%, like that tall. Okay. There would be somebody who either forgot to exit or something. So just have a look at it. That 43 would have become almost 90. This thing, but to be honest, I won't hold on. I won't hold on this much because 1:3 is good enough, right? So this would be like much more than that. This would be something like 1:6. I personally won't hold on that much. 1:3 is like good enough for me. So our case, I'll tell you, in this case, when Nifty majorly manages to pierce above this particular level, breakout, they'll actually create fresh longs. Again, it is a swing high breakout that is happening. So that is actually the reason right now we're still managing to have, increase our profits from 30K, we pick up by another 15K. So if we are still holding on to the bias that your market will actually be range bound, those positions continue to stay the same, but the fresh entries that actually comes in, that is the thing that actually compensate for the upside move. So same way, basically whenever we are running systems, we have a set of strategies that is running so that it balances out each other. Now, if you ask me, can somebody exactly copy what we are doing? You can't, because it'll take you time. Okay. And this is exactly the reason we have multiple people handling multiple systems. So now that thing, Bank Nifty, it'll be, how much was it? 0.1%. Huh? 0.1. It was 0.5. It was 0.5 just before I left the room. When I came back, it came back to 0.1. Right. So that happens in market, like that kind of a volatility, that kind of a fluctuations happens. That is why I told you we have multiple systems that will balance out. Okay. So I'll take some questions from your end. I think then after that. So today we caught this particular reversal trade. We missed out this particular opportunity. This would have been another discretionary trade. Right now, the systems that ended are not discretionary, they are rule based. I'll take some questions from your end, then I'll move on. You can ask your questions. How many of you didn't get breakfast? How many of you guys didn't have breakfast?
So good.
Just have one more, no? You didn't have, no, Varun? You had? You Varun has a cafe. Right. So I think I'll take some questions from your end. Any questions you want
We
to
can discuss how to draw the range for a.
Okay. To draw the range, what is the I'll actually show you with respect to options premium chart. On average, how much does Nifty move on a weekly basis? On average, how much do you think Nifty moves on a weekly basis?
200, 300.
Don't say 200, 300. It's in terms of percentage.
Okay.
So I would say earlier when Nifty was trading in 10,000s, Nifty had a range of like plus or minus 250 points. But right now, it more or less looks like Nifty moves within a range of almost plus or minus 400. Sometimes it can be more than that also. Okay. So that is actually how we say what is being anticipated in the markets or how much Nifty can move on a weekly basis. Now, this is 20th September, which is tomorrow. I'll have a look at 5th October. Look at 19,700 strike. What is the premium? 113. And on this side, it is 108. You're saying something?
I think it's a call.
What?
I think you're taking a call.
Oh, okay. I thought, okay. So here 19,700, if I have a look at call and put, this is like 113, 108. Okay. So combined premium kind of comes to almost 220 points. Yeah, almost 220 points is the combined premium. So what is being anticipated over here? Combined premium is telling me how much the market is being expected to move this week till 5th October. 220 points is too less. Combined premium is 220 points, which is too less. One day only Nifty will move, can move more than that. Or 2 days, 3 days, one day gap up, gap down, so we are in trouble. So I personally won't be interested in selling a strategy. Once again, it is at a good make or break support level. I told this to you today morning only. Nifty is basically at a make or break support level. See from where it bounced back today. It came down till here. We were discussing, yeah, this is actually a strong support. From there, it kind of actually bounced back. So now, if you ask me, yeah, there is a range, there is a resistance over here, there is a support over here. But this resistance and support both can actually be broken. These both can actually be broken, okay, without much difficulty. So combined premium is more or less telling me that 220 points is the range, which I would say 220 points is too less a range to consider. This 220 point thing is more or less too less a range to consider. So I won't be interested in selling a straddle. Best thing to do right now, if you're getting started with non-multiple systems you're trading, do only intraday expiry day straddles. What he said, no, Varun, just do that. Why? Because end of the day itself, we know what is the result. And you're not taking, if you're not comfortable, you can sit here. Okay? Yeah. So end of the day itself, we get to know what is the result. And second thing is, risk reward is also better. Because when you're doing straddles overnight, the problem that happens is some big upside move or big downside move and all that happens, no? We are in trouble. So I lost a lot of money doing overnight straddles, overnight positional straddles last 2 quarters. So I'll tell you, like I was not doing any kind of directional systems like 2 quarters because I was too much into selling. But when the market changed, so now you were asking regarding this bias and all, I had a problem in shifting into directional because this thing is all centered around non-directional. So, but yeah, that is actually, and it has been like till now, there was not, I'll tell you, in like 4 or 5 years, there has never ever been in a phase where non-directional was not working. I think too many people got into non-directional. Too many people got started with straddles and strangles. That could actually be a reason. Premiums were also like very cheap. Market was highly volatile. All these things came. So markets keep on evolving. So what is working right now might not work actually after 6 months or 1 year. So we also had to adopt. But ultimately, at the end of the day, it is all about risk management. And you have to be like little bit logic. You need to know how much risk you are taking, how much reward you're looking out for, how much money you need to take risk, all those things. That logic you should have. So you should have that calculation. Okay, here. So I'll tell you here also, this particular directional bias trade that we took, there also the risk was almost some 10K something, 10K, 15K. So when things went in our favor, we made double of that. But what if market came down, we lose 10K. From 30K, I lose 10K, it becomes 20K. But when market went in our favor, when we were risking 10K, we made an extra 20K. So it became 50. But if it came down, still we don't lose money. It is coming back to 20. And also I'll make profits on the all short positions that I have. So that way you should balance. So that calculation you should know. You get what I'm trying to say? When you're taking a trade, you should have that calculation in your mind, how much risk you're taking, how much you're looking to make out of it. So that calculation is not there though. Some trade you'll take 20K risk, some trade you'll take 50K risk. Maybe half of the trades you are winning, but still overall you'll be a loss-making trader. So this calculation, like you should be really quick at it. You seriously won't get that kind of a time to think, okay, how much risk? I hope you get what I'm trying to say, no? To be very honest, this is not so easy. It'll take time, but you can manage it. It's not something rocket science also. So now, like all these guys who are actually over here, they're just managing just one system. Why? Because only that they have to focus. They don't have to focus on other things. Now, if one guy tries managing every system, then it could become a problem. So I'll tell you, like, see, right now we have systems running on multiple base caps. So I have systems for 1 lakh capital. I have systems for 10 lakh capital. I have systems for 50 lakh capital. Difference is on a 50 lakh capital, I can have multiple systems that is running. Whereas on a 10 lakh capital, I could have maybe 1/5 or 1/4 of the system that is running on 50 lakh. What I'm saying is if I have 10 strategies running on 50 lakh, I can have just 2 strategies running on 10 lakhs. What if it is 1 lakh? I could hardly have one strategy that's running. So when that strategy works, it makes money. Whereas in a 50 lakh, it'll all be diversified. So that is the reason on 50 lakh, you see consistency. I showed this to you. On 50 lakh, you can actually see consistency, or you can actually see this is like pretty much balanced out because we have multiple systems on. Whereas on smaller cap, you can actually have this thing like lesser systems running. So volatility will be high. So 10 lakhs would actually have just 2 or 3 systems running. It'll be lesser. This much consistency on a 50 lakh base won't be there, but still will manage out. And this is actually one reason why people say you need a little bit significant amount while you get into markets, because you can balance out different things. Else though, you'll be focusing only on one thing. If that stops working, means you can't do anything. You'll be stuck. You can switch to a different strategy also. Because when you switch to a different strategy, they all will start working. So you'll need to give its time to figure out when to move on to the next. So that is the thing. So any questions? I think I answered your question of the range. So right now, let me tell you, it's not at all a time to sell strategies overnight, especially because premiums are too less. At least we don't, or we are not comfortable in doing it. How significant is okay, Darshana book profits. Darshana, that's great. Okay. How significant is OI data to identify such reversals? See, when we look at OI data or open interest data, let me tell you, open interest can actually be looked at from the perspective of a buyer as well as a seller. Earlier, open interest used to purely work from the perspective of a seller, but right now things are like open interest is more or less working from both perspectives. So I wouldn't be a big fan of looking at open interest to spot reversals, but areas of significant support and resistance can be looked at with the help of OI. But just levels is more than enough. Okay, to be very honest, just marking of levels is more than enough. Then though you need to develop a conviction to trade the same. Let me just get back into 5 minutes chart. So now I'll tell you, like, probably the next directional trade. So right now, what is the price action? What is the formation? It is a high, it is a low, it is a high, it is a low. So from something that was initially a lower low, lower high formation, it has basically got converted to a higher high and higher low formation. So I will consider this to be a swing high. This is a swing low. This is a swing high and this is a swing low. So if the swing high is getting broken, I'll expect the upside trend to continue. But if the swing low is getting broken, I'll expect the price to come back to the same level. Again, will I look for shorts? What do you think? Will I look for shorts now? No. Why? Because I already have exposure on the short side. And again, if market is to turn bearish, I will increase my profits. So should I be increasing my shorts? No. So I hope you understand why I have been looking only for longs from the start of the day. I already had exposure on the short side. First long position we did was a reversal. Then the next long position that we did was the this latest swing high getting broken. That was the other long position that we did. And overall, we are still running at around 50K something will be. Okay, it has come down now. Why? Because of this rejection. Now it has come down to 3740K. Okay, why? Because of this particular reversal now. Again, short is coming. I'll actually exit my longs and I'll continue to hold on to whatever I had at the start. And that will actually increase my profits because when the market picked up, you saw that whatever profit we made went down to zero. Now again, if market falls down, that'll increase my profits. I'm not going to create any new shorts. Okay. So you can ask me any questions that you have right now. I'm just taking a break at 12. So any questions you have, you can just ask me now. Anything you would like to ask on how we traded? So simple, like today, the concept that we followed was purely this particular higher high, higher low formation only. Everything that we took was purely on this particular logic. So I'll just explain it once more. So when we had a downtrend over here, the way we looked at it is this was a swing low, this was a swing high. Again, this was a swing low. Then it formed a swing high. It tried to form a swing low, but this time the low that was getting formed was not lower than the previous low. Then from there, and when it kind of actually picked up, it managed to pick above this particular swing high. So we had something similar to a double bottom formation, and from there it picked up. Okay. And we actually just went for a long. Correct. We went for a long and we held on to it till this particular level, which was once again the resistance level. So this is what we refer to as a W bottom or a double bottom formation. At the end of the day, all these levels, what are they? They're support and resistance. So when we speak about double bottom and all, we kind of actually say that this is the neckline. But what is a neckline? Neckline is nothing else but a resistance level. Okay, double bottom, you can call it now. Sometimes if 3 times it is hitting, you call it as a triple bottom. All those things we kind of say. But at the end of the day, these are nothing else but support and resistance. So that is why we narrow down. So double bottom, cup and saucer, head and shoulder. We can name multiple patterns. But at the end of the day, they're nothing else but support and resistance or trend lines. So whenever we have a good risk reward ratio in favor, we can go ahead and take a trade. Okay. So anything you'd like to ask now?
Intraday.
Yeah.
Is it important that you have a strategy like standing stuff? Or can you just do price action?
Discretionary trade. Okay.
Is that sustainable?
That's a very good question. Yeah, it's a very good question that you're asking. So the answer to that question is discretionary trading will take you time to get comfortable. So that's what I was telling. So even when I was showing all these trades in front of you, the number of people who would have held on to the trade till 1:3 is very less. Even though we entered and I held on to 1:3, most of the people would have held on only for 1:1 or not even 1:1. As soon as they saw a small profit, they'll exit. That is discretionary trading. Even if I show you exactly what I'm doing, the way how I do and the way how you do will actually be different. Now, there could be somebody who did much better than me, who would be able to hold on to the trade for 1:6, or who would actually hold on to the trade for 1:7 also. So person to person, it would be different. So for you to figure out what kind of trading style works and be comfortable with it as a discretionary trader, it would take you maybe a span of like 6 months to 2 years or maybe forever. Some people never get comfortable with this. Okay. So that depends on your mindset, that depends on your psychology, too many things, how much time you're dedicating on a day-to-day basis, multiple factors are there. Whereas when it kind of comes to systems trading, for example, this algo, this guy short, buy on short. You don't have to do much. You don't have to use your brains. You just have to turn on, turn off. So that is actually more profitable if it kind of comes in a regiment where it is in favor of you. So this 1 lakh algo that he showed, no? 1 lakh algo is making loss from December. You're using it? Okay. What's your drawdown right now? 10%. Okay. So this 1 lakh algo is actually making loss from December. But the thing is, it will make money. So holding on to it. So now the thing is like 10% loss. So 10% loss is basically under the drawdown limits, still under the drawdown limits. So now if we jump to something new, that is not an option. We are also running that algo. We are also running. That is one of the strategies that we have in our systems also. But we are making money. Bigger capital, we are making money. So in smaller accounts, we'll actually have a limitation of running just 1 or 2 systems. So that doesn't mean I should switch. So as you ask, rule-based trading, the advantage is you don't have to use your brain. You just have to follow the system as long as things are under control. Okay, now let me tell you, if you're a discretionary trader, so December, I told you from December onwards, this algo is actually making loss. 10% is drawdown and took. If you're a discretionary trader who is making loss, no, in 2 months' time, you'll wipe out your account. You don't need much time to wipe out. If you're a system trader, you're making profit or loss, that'll happen gradually. That'll happen over a period of time. But if you are a discretionary trader, one trade you have lost it, next trade you'll take more risk. Then again, you'll take more risk. Maybe in a span of 1 month or 2 months, or maybe even before that itself, you'll be wiping out your account if your systems are not working or if things that you're following is not in place. But if you're a rule-based trader, is more or less an approach with which you kind of actually have to put in your patience. And like at least 1 financial year or more than that is actually needed to see some growth.
Why I asked you is,
Yeah.
I've been doing price actions for a while.
Mm.
I've been doing these.
Yeah.
But the point is, I always see a lot of people, oh, this is not the right way of doing. You need to have these strategies. So I'm just wondering, in which ways I'm making money.
Yeah.
I figured out risk management, my stop loss, all of that. And I have the right. Why do I have to follow another 10
Exactly.
things,
Exactly.
which is different?
Correct.
And again, learning and confusing what.
Correct. Don't
So
do that.
is that
Okay. Now the thing is,
sustainability?
exactly.
Eventually, should I be learning all of this?
Right.
Today?
Got it.
Generally,
Over time.
over time.
So thing is, it's on scalability. Okay. So discretionary trading, I'll tell you. So I'll tell you.
Or
Like,
should I just take time to master one and then over a period of time?
Of course. That's always the best approach. So I'll tell you, I'll be very frank with you. The biggest that I have actually punched in a single go is like around 5 CR in an order. That is order value that I have punched, the biggest is like 5 CR. But I have this guy called Jason in my team who has punched like 20 CR, 30 CR, and all he punches in a single go, order value. So if you ask me, am I comfortable in seeing the MTM fluctuations on like 30 CR, 40 CR? I'm not. But these guys are, because they're seeing that on a day-to-day basis. Now the question is how scalable your systems are. So he was asking about Hero Zero. I'm personally not comfortable in doing Hero Zero on a larger capital. But somebody who is doing it on a smaller capital, they would actually be, they would actually be comfortable with it because they're not seeing too much of a fluctuation. So if you feel your system is not scalable, so price action you're trading right now, most of the systems can be easily be scaled up to 20 lakhs, 30 lakhs and all. But beyond that, when you're kind of actually doing, is the MTM fluctuations giving you goosebumps? MTM profit loss, all those things. Are you getting panic out of seeing your P&L fluctuating much? So here also, if you have a look at it, we don't see much of a P&L fluctuation. But what if 50 lakh account all of a sudden is showing 1 lakh, then 2 lakh profit, 3 lakh profit, then 3 lakh loss? Too much fluctuation. Your heartbeat will also keep changing. So at times, some of the strategies, that is especially price action strategies that we follow, sometimes the volatility will be too high that we won't have that comfort level to scale it up. Maybe you can do till 10 lots, but will you be able to do 100 lots or 200 lots? So as far as I personally think, or the way I look at stuff, whatever is not scalable is not worth doing. You get what I'm trying to say. And as I also mentioned to you, at some point in time, probably like, see, trading is a lot depend on your psychology. Okay. So we don't have anything else to bother about. We can purely focus on our trading just on price action. But let's say some external hindrances are coming, some personal issues. Maybe you lose your focus. So that point in time, maybe you can't trade price action the exact same way when you were doing it different before. You will have like different biases, too many things, too much pressure. So that is where systems trading comes into place. So right now, I'll tell you, even if I don't come to office, like whatever strategy is happening here will happen exactly the same. Because we have made it in the form of systems that actually run even without my manual intervention. So that is the advantage of building systems or building like different kind of strategies that go complementary with each other. You get what I'm trying to say? No. So that doesn't mean you have to do it. That depends on what is your perspective. Are you planning to scale your capital? Are you planning to kind of do the strategy over like multiple or a couple of crores? So is it scalable? Will you be comfortable in seeing the fluctuations in P&L as you see in this particular system when you're trading a much bigger capital? So then one more thing is, as your capital increases, you'll actually focus more on consistency than returns. Consistency will be something that matters more. 2%, 3% per month. So all those perspectives will also change. So you'll figure it out. So to be honest, the answer to the question is you have to figure it out by yourself, what you're expecting from the markets. So if you're just looking at it, like some people, like they don't think about scaling. They don't want to scale. Whatever they're doing right now, they want to just do that consistently. Whatever systems you have in place that is working well for you, stick with it. Think about bringing in more systems when you feel the other system is not working. But let's say that you're thinking about scaling, you need to bring in more capital, you need to diversify. So we have our investment product also. So if you ask me, then the thing is, we don't need to do our investment product when we're trading. But to be honest, in the last 6 months, our investment product did much better than our trading. So that is why we have a basket of different things. So that when one doesn't work, the other will work, and that will actually just balance out stuff. So the answer to that question is, it depends on what you want to do out of trading. You want to scale, you want to grow your capital, you want to diversify into multiple. So right now we are actually offering real estate investments also for our clients. So that is not at all linked to the stock market, but still we are offering it. But because that is another avenue. So that's the question. That's a question that is like too personal. So for me right now, to diversify, manage the risk, I need multiple things. So that is what is working for me, because that is gives me more peace of mind. If something is not working, the other will take care. I hope you're getting what I'm trying to say.
In short, it's all up to what I want to do.
Exactly.
It doesn't have to be influenced by a third.
Exactly, in a sense. And there should never ever be this fear of missing out. So some people, like, they're like very good. So if you are a successful discretionary trader, let me tell you, you as a person will be like pretty much disciplined in personal life also. That is the reason why you are a successful discretionary trader. But let's say you're not disciplined in your personal life, you can never ever be a discretionary trader, because always will be emotional. You can't. That's what I said. Trading is not something that is suitable for everybody. Let me be very honest. So systems trading, but everybody can do, because you're not even looking into the charts. You're just deploying it. So if your risk management is right, in the long run, you'll make money. So both are true. So now here we have a situation. This is like an inverted head and shoulder. Okay, this pattern that we see is something like an inverted head and shoulder. We had a shoulder coming down, head, then so this is like an inverted head and shoulder that we are kind of finally seeing. This is the old resistance level that is later on acting as a support, right? So this was an old resistance that later on started to act as a support. But look at the formation right now. Is it still continuing to be higher high, higher low? Right? So can I look for a long position above this? What do you think? If it breaks above this, we can actually just consider going for a high breakout. Okay. So as at the moment, it is again coming back to 50K. So since now already I created longs. So where did we create longs? We created longs above this particular swing high. So should I create longs again? I already created longs above this. So should I create longs? No, I should just continue holding on to it, let it go up, I'll make more money. Now, if it comes below this, I can think or I can consider exiting my longs and I need not short it. Already I have short. All the earlier shorts I had, I'll continue holding on and I'll exit the fresh longs I created. You get what I'm trying to say, no? So that is the way how we are actually positioned for the day. If it continues moving up, let it move up, we'll make money. If it continues falling down, we'll exit the longs, we'll continue holding on to the initial shorts. Okay. So right now we're like 55. So if it continues picking up, though, we are making more money. That's it. Okay. We were at 75K at the beginning. At the start, most of you guys were in the we were at 75K. So right now our equity is also like our P&L is still below what we had at the start of the day. So the question is like, could we have exited everything and came out? No. Now maybe let's say this just this trade, no, this particular trade would have changed the entire game. By any chance, if we got this particular entry, we would have been like almost 80K, 90K by now. So yeah, that happens. So nothing to do about it. So the thing is, this have multiple systems, and every trade that you take should not be dependent on something that you did in the past or something that you're planning to do in the future. I think I'll take some questions. If you don't have enough capital, please don't come into options trading. Okay. That's my humble request. How open interest can be interpreted from both buyer and seller perspective. Okay. So generally, when it kind of comes to option selling, option sellers are the ones who come with a higher capital. Correct. So when we have a look at the open interest that is actually present at any particular strike, we say that sellers have an upper hand there. So let's say there is a call option strike that has a very huge OI. I think I can show you. It'll be better. So here itself, we have a look at it. I see the 19,800 has an OI of 24 lakhs. Okay. So by any chance, market is managing to pick above 19,800. The people who sold 19,800 call could potentially take loss. So the sellers who sold 19,800 call would actually try to protect it. Because if market manages to pick above this, so look at these levels. So this sensible platform is free to use right now. Okay, Saroda account you have, all of you can use. All of you have Saroda account. So you can use it for free. Before it was, I also took a paid subscription. So if at all the price actually manages to pick above this particular level, then the people who sold 19,800 call will actually end up losing. So always 19,800 if it is touching, since it is also a psychological level. Price will test that level. Price will try to play around nearby that level, then only will break it. It won't just break so easily. Okay. So I would say that the sellers over there will actually try to protect it. Same way on the side, downside, I see that there is a huge OI that is staying at 19,600 put. 19,600 actually has a huge OI. So if it is to fall down also, 19,600 will actually hold as a as a good support level. It won't easily be broken. But if at all there are strikes with high OI that is getting broken, the moves are going to be so intense. Like rapid moves will actually happen if either the resistance or either the support is actually getting broken. Okay. So that is one way how we look at OI. But to be honest, right now, this is not too much applicable because it's not something that we can depend upon that much these days. So we're not giving it that kind of an importance as was there earlier. Right now, change in OI is actually relevant, but change in OI for different strikes. So for example, let's say there is a big breakout that is being expected on the upside. So when the levels are being tested itself, we'll see that people who initially sold call options over there, they'll come out of it. So we'll see the open interest dipping before the breakout. At any particular strike, we are actually seeing that the open interest values are dipping. That means initially people who created contracts over there, initially the sellers over there, they're afraid that the breakout will happen, they'll come out. But if they're holding strong, let's say a level is being tested, more and more open interest is being created, means the sellers are not ready to give up. They know they can push it down. So then we feel that okay, this level can't be broken. But If at all it is going to be broken, we usually observe operators at that particular strikes manages to come down. And then the breakout happens. This phenomenon is called a short covering. Keep it aside, but that is usually the way how you can actually interpret it. But right now it is not so relevant because market has changed a lot. All these logics were like working like very smooth around 2-3 years back, but now it's not something you can totally depend upon. So yeah, I think I'll take some other questions. What's the safe capital to start investing? See, investing means any small capital you can start off, and what is actually more important is you getting started. And rather than like how much capital is good to start off, it is all about getting started. Okay, so as long as you can get started, that's the best thing. Start as early as possible. We show your Bank Nifty position. Would it be correct to buy put now? I don't think buying put will be a good idea right now. So Bank Nifty, the short positions that we have right now, it is like at slight loss, 10K loss. Okay. So these are the positions that I have. So these are algos. Okay. These are non-directional systems. And we have the rolling straddles also running. So guys, I think I'll just take a short break right now. Okay. So people on Zoom, we're just winding up right now. So thanks a lot for your time. Okay, I'll be sharing the recording too. Thank you.